Is the housing market crashing? I hear the predictions of the housing market crash 2022, but what's really happening? Did your home's value increase or decrease in the last 3 months? The last 3 months, the market activity has been changing. So if you're wondering what the values did, we're going to break it down for you. Hi, I'm Diana Benson with eXp Realty and the Great Escape. In the last 3 months, we've seen many changes with the interest rates, prices, and supply. So what does that mean to the market now? So let's get to the numbers. As an appraiser for over 25 years, I love the numbers and data. I know many of you are thinking about voting today, and one of the considerations may be the economy and the housing market because it affects all of us. So let's take a look at the numbers. In the last month, we have had 5,328 closed sales. To put this in perspective, let's take a look at last year. There were 9,365 sales this time last year and 10,414 sales this time 2 years ago. So prices have gone down over the last 3 months due to the increased supply and the decreasing demand. The average sales price per square foot has been $277.49. Last quarter, right about August, it was $285 a square foot. The median sales price was $450,000 back in August, and now it's $435,000. But this really varies for each area. So for instance, let's take a look at Phoenix. In Phoenix in June, the sales price was $619,761. Now the average sales price is $540,483. In Mesa, the average sales price was $573,519. Now it's $557,144. It showed recovery over that last month. In Queen Creek, the average sales price was $609,491. It's been going up and down over the last quarter. And again, showing some recovery in the last month. It's now at $601,732. So what about current activity? Currently on the market, we have roughly 22,288 homes on the market. This time last year, we had 11,848 homes, and 2 years ago, 13,927 homes. The homes have been on the market for an average 57 days. Right now, it's easier to find a home because of the large supply. You can be more patient and you can find the home that's just right for you. And you don't have to waive the inspection. You don't have to waive the appraisal. It's much more friendlier to the buyer's market right now. More like a normal market that we used to know before the frenzy of the last few years. So moving forward, what can we expect? It's hard to look at history for answers because we have a 40-year high interest and inflation rate. But we can look at the data and get some clues. One thing is that we have to look at is the current pending sales, those under contract. Right now, there are 6,599 homes under contract. So that's about 29% of our supply of those 22,888 active listings. Now, last quarter, there were 8,099 under contract with fewer listings. Last year, there were 11,822 under contract, or basically the same number that were actively listing, or about 100%. And the year before that, there were 12,972 under contract, or about 93% of the current listings. So this shows that we are continuing to slow down more. The interest rate increases are really affecting the volume of sales. This shows continued slowdown for the immediate future, the next couple of months. One good sign is that the listings, the dollar per square foot asking prices right now are remaining pretty stable. Currently, they're at $322.17 a square foot versus $321.06 last month. So this was a good sign. Now, the large iBuyers like Open Door have been selling off their properties, which is really hurting the market as they are typically selling below market of other sellers. They still have about 1,432 homes to dispose of, so it's going to continue to affect the market. But it appears that they are starting to slow down in selling them. Now, marketing times are increasing with an average of 57 days on market before they sell versus the last month of 48 days. So let's keep the seasonal trends in mind though, because typically things do slow down the last 2 months out of the year and then pick up again right around January 15th. But inflation is remaining strong. Therefore, it appears that the Fed will increase interest rates again in December. So this will slow down this typical seasonal pickup in January. The Fed's decision is really going to be steering the housing market and how long this recession is going to last. So we're going to have to keep an eye on their future moves. So what do you think? The market definitely has shifted towards a buyer's market. If you have any additional questions about the current market or you're thinking about making a move in the near future, please feel free to reach out to us. I absolutely love hearing from you. And always thank you so much for your referrals. They're the lifeblood of our business and keep us going. So until next time, thanks for watching. I'm Diana Benson with A Great Escape, where we help people escape to their next chapter. I'll see you next time.